This morning I ran my scan looking for a trade, and I came across a potential trade in Seagate, STX. This is the weekly chart here, and the one thing I want you to notice on this weekly chart is the candle we have forming right now, and it is showing quite a bit of weakness on the weekly chart. So something to kind of keep an eye on as we're trying to look at a trade. So let's drill down to the daily chart. You see we have the stacked moving averages, which is a sign of an uptrend, and you can see we have had an uptrend, but there's been a lot of volatility, through here, and even right in here we had a gap down, a move below the 50, and then a pop back up. 200 is a long ways away, so we don't have any support there. We really don't have any trend line support to speak of. We do have our EMA support, but it really didn't hold here. This was the 30, did not hold, and obviously the rest of them held. In fact, it crossed over. So it's just now come back into what I would consider a positive trend for us. But there is still a trade here, and I'm going to keep going to show it to you. I'm a little concerned about the weakness I'm seeing on the weekly candle, so I'm going to try to allow for that as I set this trade up. Take a look at the next chart. This is the wave chart, and you can see we've come back down to the top of the wave. The wave is showing an uptrend. It's leveled out a little right here, but it looks like it may be trying to continue back up. But we do have some support in the wave through this area. So overall, the wave chart is not terrible. It did break it a few times. And a lot of times when I see this, I will go back, and this is using a 21 EMA wave. What I will do is I will go back and play with some other values in this. You don't always have to use the 21. That's just the one that I use the most of the time. But you could use a 28, even a 14, but you get a lot of trade signals. That's too many for me. 28, 35, just whatever you're comfortable with. And you can, to some degree, back fit the wave to see how it matches. Now, I'm not a huge fan of back fitting a strategy to previous price action, but if you're just using it as a signal area for you to start looking for a trade, I think you can get away with that. And some EMAs do match up better with different stocks as compared to others. Take a look at our Bollinger Bands. Like first, you see the RSI is right in the middle, so we don't really have a signal there. Take a look at the Bollinger Bands. They're very flat, which means that everything is consolidating, and you can see that as we got a pretty good channel from here into here. You've got a channel going on. You look at the TTM squeeze indicator. It's negative right now, but you're starting to get a positive bar here. We'll have to see how price action opens today to know for sure. There are a number of trades we could try to set up here based on what I'm seeing in the Bollinger Bands. A lot of times I want to buy an option just because the implied volatility is probably low as we look at these bands, and I'll be looking for a breakout. And we've got some we've got consolidation, a squeeze going into looking for a breakout in one direction or the other. We don't know which direction. We just know that everything is coiling up like pressing a spring in, getting ready to explode probably in one direction or the other. As you can see in the past, we've had this happen and it's moved down. And here we got a small one before it took off again. My gut feeling is that it is going to go up. What I initially looked at when I started looking for a trade here is I looked at doing a call calendar and either buying the 60 call for to expire next week, and then buying the 31 January to cover it. I looked at the 60. I looked at the $60.50 one. Both had a lot of potential, and you could do a call calendar here. And with the implied volatility and the consolidation you've got here, that might be a good trade because you can get a decent price on the short one, and then a really good price on the long call. However, because I am expecting a breakout, there's a little bit of danger in that, because even if I do the calls, if it were to shoot up to say 64, then that could still be an unprofitable trade on the calendar. So I wanted to look at a different type of trade to show you. What I want to set up is something called a broken wing iron condor. And basically, you can set them up so that you have either no risk to the upside or no risk to the downside. Because I think we're going to move up, I'm going to look at a no risk to the upside trade. So what I did, and I already pulled it up in here, is I'll switch over here. I went to the 31 January, which is 36 days out, and I want to buy and sell the 58 I want to sell the 58 put, and I want to sell the 58 call, and then I want to buy the 58.50 call to cover it, and then I want to buy the 55 put to cover the put to the downside. And you get a risk profile, which is what I want to show you, of something like this. Now, right here is where current price action is. And if everything were just expire where it is today, then we're going to get a $56 profit. If it goes up to whatever, we're going to have a $56 profit. If it finishes right at 58, which is our two shorts, then our profit is going to be around $103, roughly $105. So that would be the best thing that could happen to us if it finishes right at 58. That would be about, our overall risk is $194, which is our credit minus the width of this spread here. And you see our break even is at about 56.95, 56.94 is our break even. So let's look at where that shows up on the chart. 56.94 is going to show up right in this area. So you see our break even is below the 50, below the 30, below the 20, and below the 10. So we've got all that support on this particular chart that is protecting us from this down move where we would go to start getting a loss on this trade. We'll take a look at the next chart. On the wave, we've got complete wave support before we get to it. We don't have Keltner channel support, but we do have the support of almost the entire wave before we have to break through before we hit our stop or our break-even point. On the Bollinger Bands, you see kind of the same thing. We've got the support of the mean. We've got one deviation, second deviation, or between the second and third deviation for support. We do not have support of this price level here. But we do have support at this price level because we had the close here, we had the low of that candle here. So this is another price level. We have support here. All we do on this particular trade, I'll be looking to probably close it. If I get it for $1.06, I'm probably looking to close it at around half of this. So I'd be looking for about a 50% credit. Let's see what our probabilities are on it because this trade would expire on the 31st. And our probability of being profitable is starting out at 65.04%. The only concern I have in this trade is that how that weekly candle was shaping up was a little concerning to me. And also, I wouldn't be surprised to see a sell-off in the market as we go into the end of year. However, even if the market does sell off going into the end of year, I would expect a rebound going into next year based on what we've seen throughout this year. So this is not a terrible trade. It's not the best broken wing iron condor, but I think for this particular security and this particular setup, I really like it. I'm gonna wait for the market to open this morning and then see where the price levels are. But assuming that we're still somewhere in this range right through here, then I'm probably going to go ahead and set this trade up in my live account. If you have any questions, let me know. Please like the video. Please subscribe to the channel. Thanks. Bye.